sharing numbers is so helpful for other people to know,
Yes.
like, okay, how much do I actually like number wise have to be putting away?
And S-Corps are a big thing. Like you hear a lot of, TikToks and reels and experts talking about convert yourself to an S-Corp, save this, this, this. And they are fantastic tax saving vehicles if they're done correctly.
Hello, everybody, and welcome back to another episode of my podcast. Super excited to have you guys here today because I have a really special guest. I'm going to be having Jackie Easterday on this episode. She is a small business accountant and a CPA, and she knows her stuff. So I'm so excited to have her on. All things to do with finance, savings, all the things that we need to know when starting your own business. I hope that this answers all of your questions that comes to money. So definitely go check out Jackie's website. I'll have everything linked down below, but I hope you enjoy the episode. Well, thank you so much for doing this with me today. I'm super excited to chat more with you. I think it was last year that I did a discovery call with you. And just in that short amount of time, you answered so many questions for me.
Yes.
So I wanted to have you on to kind of answer all the questions that like graphic designers have. And I know I saw some questions come through. Whoops. With just people that have like general tax questions. So
Yeah.
super excited to chat with you. But if you could just introduce yourself and kind of just a little rundown of what it is that you provide would be great.
Yeah. So I am Jackie Easterday. I'm a CPA, which is basically just fancy term that I have, my degree in accounting and went through all the testing and stuff to be really like a certified accountant. I have experience in public accounting, which is the, big company taxes and all that stuff. And while I was in public, I did work with a bunch of small businesses and just found that was really where my passion kind of lied. But hated the structure of corporate and especially like busy season. Like that was just not my jam, especially once I started having kids. And so just started kind of dreaming of how to restructure, still provide this high level of quality, service to small businesses because it is so needed for them to have a financial partner and someone who knows their numbers and their books and that side of their business, but in a way that is not as rigid and stiff. And so we have developed the Easterday group, and my husband and I work together. I'm kind of the CPA tax guru. He's kind of become our bookkeeping tech guru. We've got a couple of bookkeepers on our team, our couple of tax preparers, and honestly, I love what we're doing. We have fantastic clients. They range from service providers to Etsy shop owners, hairstylists, like all industries. But the core, behind everything is I want to empower small business owners to be able to have their numbers in front of them to grow their business, scale their business into whatever direction they want. Some people that is growing a huge business. Some people that is growing a part-time business so they can do other things on the side. We all have kind of different ends and whys and all of that. But at the end of the day, I just want to be able to partner with these business owners to help them kind of move their business in the direction they want to and see the importance behind their numbers and all of that. So I love what we're doing. I feel like we kind of bring accounting to the table in a very approachable manner. I think that it's one of those, your business numbers are so personal and you have to find the right person that you're connecting and jiving with to really kind of be vulnerable and open up that side of your business to. And I think the biggest way to be able to do that is it's got to be someone you feel like isn't going to judge you and is approachable and it's a comfortable setting. And that's like the biggest thing that I think kind of sets us apart is I want you to feel comfortable. Come to me. That's how we're really going to get into the weeds and really kind of grow and scale and dive deep into everything.
Yeah, no, that's so true because just your content alone was so helpful. Yeah. And I feel like every month I feel like money is just this thing that's like we think about just randomly throughout the month. And I feel like your content when you would send those monthly emails with reminder or like these monthly tips, it was so helpful. I was like, okay, I needed that reminder because every month I'm like kind of having to mentally or even write it down to tell myself to like put money aside and all that. And then also,
I think,
go ahead. I was going to say, when I first talked to you, you made it super comfortable, sharing like money, because money is like such a taboo topic, which is so weird.
It
But
is.
you made it so comfortable. So that's another
Well, and
reason
that's
why
like
to have
the
you on.
whole goal, like if I was going to go to I kind of put myself in the position, I am a small business owner myself as well, right? So I can kind of relate to my clients in that direct way.
Yeah.
And it's similar. Like I've had contracts drawn up by attorneys, like our contracts and things, but you make tweaks and changes over time. And if I have a question for, actually yesterday it was just something related to health insurance and I don't, I don't know it. And I feel silly and I feel silly asking the question and I feel dumb and it makes me not want to ask it. And that's the exact opposite impact, I want to have on my clients. I want them just to feel completely comfortable brain dumping all of their things on me
Yeah.
because that's how you really get to the core of like what's bothering you, what you want to do, what you want to grow. And if we kind of feel restricted in how we can interact with somebody, you can't really maximize things.
Yeah. No, I think that's so important. And I
Yeah.
feel like sharing numbers is so helpful for other people to know,
Yes.
like, okay, how much do I actually like number wise have to
Yeah.
be putting away and everything. So
Yeah.
I love that.
Yeah.
I'd love to kind of jump into like explaining, I guess, because I think one of the first things when I took my business
Yeah.
full time, what I was nervous about was like what structure of my business I should set up
Yeah.
to kind of help me with my taxes. So
Yeah.
could you kind of like explain your thought process on like
Yeah.
LLCs and S
Yeah.
corps and all that? That'd be
Yeah.
helpful.
So I will preface it. I am not an attorney, and I think one of a very common misconception is that CPAs are experts in the setup of LLCs. I'm not an expert in how to set up an LLC and necessarily legally what is the right, structure for your state from a tax perspective. That's kind of our jam. That's where we can really kind of help you out.
Okay.
And there's kind of two options when you first start out. You can start out as a sole proprietor, which just means you're going to be filing all your profits and, so all your income, your expenses, everything is going to go under your individual social security number. And really that's just your business is kind of an extension of your personal assets, right? And so when it comes time for tax reporting, there's an actual form within your individual tax return. It's called a Schedule C. That's where you will report your income and all of your expenses from your business, determine your profit. That gets combined with any like W-2s, interest income, any other income sources that you have, and everything kind of gets calculated on that end. So that's kind of, piece one. Now, the other avenue is opening up like an LLC. That's typically the most common like legal structure that you may open up for your business. Once you open up an LLC, you register typically with your state. And again, there's lots of different state nuances, but you're creating an entity separate from yourself. So that LLC is going to get a tax ID number. It's called an EIN. And that LLC is going to have its own bank account related to that EIN. So now you're an owner of that LLC, the business and you are separate. So it kind of gives you a little bit of that legal protection. And again, over my head with legalese, but
That's okay.
if something were to happen, your business assets are separated from your personal assets. You kind of have that corporate veil of protection, I think is kind of what they refer to it as. And so there is a legal like purpose for setting that LLC up. Now,
Okay.
with that said, when you first set up an LLC, if you are the sole owner of your LLC, from a tax perspective, the IRS considers you disregarded. They say, hey, you're the sole owner, file the exact same way you would have filed if you weren't an LLC, because it simplifies their process. Because then it still goes on your individual return. They don't have to, they don't have to process another business return. So it stays very, very simple from a tax perspective, but from a legal perspective, it's a totally separate entity. You're just the owner of that entity.
Okay.
Now, one of the biggest misconceptions I hear is S-Corps. And so people think, am I an LLC or should I become an S-Corp? An S-Corp is an LLC. An S-Corp is a tax designation. An LLC is a legal designation. So
Okay.
what that means is, you have to become an LLC before you can become an S-Corp. And an S-Corp is just telling the IRS in your state, hey, tax me as an S-Corp. I'm remaining an LLC, my EIN, everything structurally and legally stays the same. But an S-Corp has some different tax benefits. There's different tax reporting. So once you kind of get to that point in your business, and we can talk about that in a minute. Now all of a sudden your S-Corp has a separate tax return to file. And and there's like other caveats, like you have to run payroll, you become an employee of your business, so you have to go on payroll. There's just some different things that are, when you kind of get to that point in time, like you want to work with an accountant or CPA on who really is an expert in S-Corps and kind of all the nuances to make sure you're doing everything correctly. Because there are big tax benefits, but there's additional expenses like a separate tax return, paying a payroll provider, things like that. And so those are kind of the LLC sole prop is sort of like decision one. And then
Okay.
down the road, as your business grows, decision two is, do you remain an LLC or do you decide to be taxed as an S-Corp? And that's typically, I tell people it varies, but rule of thumb would be if you are working full time in your business and probably profiting somewhere between 80 and 100,000 in
Okay.
profit, it might be worth it at that point in time to start talking to a CPA about whether or not an S-Corp makes sense for you.
Okay.
Deciding to be an S-Corp sooner than that, now all of a sudden you could actually be spending more in additional costs than you are for the tax benefit. So kind of
Okay.
two separate decisions there, but one is kind of your initial, your very first decision, and then down the road as you grow, you're kind of faced with the second decision of whether or not to be taxed as an S-Corp.
Okay. Yeah, I was curious about that. If you reach a certain income level and then you decide to kind of
Yes.
change that structure, but you did mention that like 80,000 to 100,000, then maybe
Yeah,
chatting
and
with
it's
someone like
different.
you.
Yeah, it's different for everybody, but it's really important because there's so much misinformation out there about S-Corps, especially um, I think TikTok and all these tax trends and loopholes and all these things have become such a hot viral topic over the past year or 2 years.
Yeah.
And S-Corps are a big thing. Like you hear a lot of, TikToks and reels and experts talking about convert yourself to an S-Corp, save this, this, this. And they are fantastic tax saving vehicles if they're done correctly. Because if they're not, you could be spending a lot more money on these additional fees than you're saving in taxes and just creating a bunch of extra work for yourself. So it's really important
Okay.
to kind of keep that threshold in the back of your mind, but know, okay, this might be time to kind of sit down and talk with somebody who is an expert in that area and can kind of give you some more guidance.
That makes sense. Yeah.
Yeah.
In terms of like because I'm just kind of walking through my mental
Yeah.
kind of process when I started my business. That was the first thing I thought about. And then the next thing I thought about was like business accounts,
Yep.
credit cards, all that. So
Yeah.
would you recommend, I think this is a tip you gave me when I spoke to you, is just
Yeah.
keeping everything separate. So like business
Yes.
expenses, personal expenses.
The
What would be your
sooner
tips
you
on
can,
that?
yeah. So the sooner you can keep everything separate, the
Yeah.
better off you're going to be. Ideally, day one, you would have everything separate. So even if you were a sole proprietor and filing under your social security number, you can still open a business bank account and
Okay.
it would just be under your name and social, but it's a business account. So the sooner you can institute and kind of create those separate accounts and utilize them, the better. It's really, really crucial when you become an LLC because if you are commingling, which is kind of what that's called, your transactions, you start to lose that legal protection we were talking about. Because if you're using all your business funds to pay personal expenses and vice versa, if
Mhm.
something were to happen, there's really not a big distinguishing factor. So really from day one, you should open new bank accounts. So assuming you are growing and scaling and you want to like make a big business out of this, not big, whatever is your end goal.
Yeah.
You kind of start with the LLC. Once your LLC comes through, you get an EIN, that's your tax ID number. All of that can be taken to a bank and you open up business bank accounts in that LLC's name. And then you will be a signer on that account. And then I typically tell everybody open up a checking account
Okay.
and at least one, if not two savings accounts. And the checking account, first step, you're going to want to connect your payment processor. So if you use Stripe or Square or Honeybook or whatever, you want to connect that so all your payouts get dumped into that checking account. Then
Okay.
go through and figure out any of your expenses that you want to use. So if you don't want to open a credit card, that's perfectly fine. Use your debit card, put Canva, Adobe, Zoom, QuickBooks, like all your charges, start utilizing that debit card. So now everything is separated into that one account.
Okay.
And then the savings accounts come into play because at the end of the month, everything's coming in and out of one account. You can kind of look at your profit and say, okay, this is what I made for the month and I need to save 30 or 35% for taxes. So if my profit was 10,000, I'm going to go ahead and put 3,500, move it into that one savings account. It's out of your checking account. It's earmarked for taxes. It's in a separate bucket. It's out of sight, kind of out of mind.
Okay.
And then that third savings account can be kind of just like a rainy day fund. Every business has different goals. Some people want to get to a point where they're employing several people and contractors, and maybe they want to have 6 months of those expenses built up in a rainy day fund to be able to still cover those salaries if something were to happen. Maybe it is saving up so you can go on maternity leave for 3 months, but still pay yourself appropriately. Maybe it's saving up for a vacation, or it is just having a cushion. It could be whatever it is. So
Yeah.
that's really a variation. Like if you're putting money into that tax savings, maybe you want to put 5%, 10%. Maybe it's a fixed number. Maybe it's $1,000, but put something into that rainy day, that second savings account. Then the remainder of those funds are what you can do, pay yourself, kind of whatever you would decide you want to do with that. But
Yeah.
separating everything makes legally, it's the best option too. When it comes to bookkeeping, if everything's in one account or not, you're not having to weed through I had to weed through my personal credit card to find my software charges.
Yeah.
It would be terrible. I would be going through like a zillion Amazon charges to find that like one, Adobe charge.
Yeah.
So I see a lot of times people come to me at tax time and they're like, no, I didn't have things separate. And it's too much of a headache for me to go through all of my cards and try and find these expenses. I'm just going to forget about it.
Yeah.
And that's fine. The IRS just wants you to report the income. It's your right to offset it with deductions and write-offs. But you're leaving money on the table that you're totally entitled to take the write-off for. And so I see so many times people are just like, forget it. I paid for it personally. I'm not going to worry about it. But if that's all coming out of that same account, whether it's a checking account or it's a business credit card, so easy to find that stuff. Like it just makes everything so much simpler.
It's so true.
Yeah.
Maybe I can share with you like the way I have it set up and you can tell me if it's bad, wrong, or because it might help me too. But I have my business checking account.
Yeah.
And then I have a CD, I think that's what it's called, with like Synchrony Bank, which is like my kind of main saving account for my business. And then it's actually not technically a business credit card. Still, it's like my personal credit card, but I only use it for business.
Yeah.
And then I have a personal credit card, which is like my Apple card. And so I made my Apple card. I think Apple has like a saving account set up now. So I have it automatically saving some personal money for me, kind of like you said, the rainy day fund.
Yeah.
And then it does like the interest. Like it adds on money. I think is that called a CD or something?
Yeah. Well, it's just like you're earning interest on like a savings account. Yeah.
Okay. So I have that. And then I tried to I have like an automated thing to go into my business saving for taxes every month. But I'm wondering, like, do you have a recommendation of like what kind of saving account to set up? Like what company or?
Yeah. So there's lots of different kind of schools of thought here. So one, I think that's perfect to kind of be saving for taxes on a regular basis. That's huge because on one hand, you are, in the back of your mind, like, okay, like we just filed our business taxes and I had to cut a huge check, but as painful as it is to let go of that, it's in a separate account and I haven't been paying attention to it all year. There's something so visual of knowing that stuff is separated. But you really want to base that amount on your current profit. So if your income is going to, your profits are going to go up and down, what's going into those accounts is going to go up and down. So we have some clients that, there's so many different options here. We have some clients that utilize accounts like Ally or other online banks that have buckets within them.
Okay.
And, it's all one checking account, but you kind of have buckets. So when you log in, you can see like your main account, but here's how I have all that money allocated. That's one way to do it. And a lot of online banks are kind of moving in that direction. We have tons of clients who just literally have a checking account and 2 savings accounts, all log in through Chase. It's all there and they just move money.
Okay.
We also have clients, if you really start to build up a pretty heavy tax savings, it might make sense to open like a high yield savings account because most of these savings accounts earn minimal interest. Maybe you accumulate $100 or $200 of interest throughout an entire year. But some of these higher yield savings accounts, I've seen people, your tax balance gets pretty, if you're saving and you're growing and scaling, it can get pretty high.
Yeah.
I've seen people, earning $500 to $2,000 on interest. So that's just with their money sitting there. And some of the options that I've seen clients use, American Express has a really good high interest business savings account. Capital One does. And QuickBooks does. If you use QuickBooks and you set up QuickBooks payments, there is typically there's an option to set up like a QuickBooks savings account or a checking account. And those are pretty high interest earning as well. So couple different schools of thought just on, but
Yeah.
the real premise is that you just want to be pulling that money out of that checking account and putting it in somewhere separate to kind of save for taxes.
Okay. It was a high yield savings. When you said that,
Yeah.
I was like,
Yeah.
that's what I was trying,
Yes.
the name I was
Yeah.
trying to think
Yeah.
of. I'm going to look into QuickBooks though, because I love having everything under like the same roof. And I do use QuickBooks still for like the
Yeah.
bookkeeping side of things. Um, I guess I feel like this is a question I have and like other people have a lot, but
Yeah.
like, how much would you recommend people save every month for taxes?
So if you are a sole proprietor in LLC and you haven't gone through the whole S-Corp piece, it's really kind of hard to determine it specifically, but I would say 30 to 35% of your profit. So your income after your expenses, 30 to 35% of that, I would say for taxes to give yourself a good cushion because you want to factor in your state taxes, which can range anywhere from 2 to 5%.
Hmm.
There's a handful of states, like I'm in Texas, we don't have income tax, but for the most part, you're pretty safe with like a 2 to 5% cushion for state. Federal is typically like 12 to 15% for income taxes is a good cushion.
Okay.
But your federal tax, if you are not an S corp yet, your profits are also taxed at self-employment tax rate. So you pay kind of two pieces on the same return. You pay your income taxes and self-employment. And self-employment are 15%. So when you start adding all that together, 30 to
Yeah.
35 is a pretty good cushion. There's going to be other like standard deductions and deductions for your business profits and things like that that a CPA can kind of really work through and kind of help you on that would lower that.
Yeah.
But that gives you a really good base and cushion to go into tax time. And I will tell you, there is nothing better than thinking like, okay, I have $20,000 earmarked for taxes and then finding out your taxes cost $13,000 and
Yeah.
feeling like, oh, hey, I have a $7,000 bonus now. It's no
Yeah.
one is ever upset about saving too much.
Yeah.
It might
Yeah.
not feel good in the moment, but in the grand scheme of things, when you get to that other side of it, you're just going to feel so much relief, like going into it, knowing you have enough kind of earmarked.
Yeah, no, that's helpful. It
Yeah.
definitely is nice. And then you have like a little extra to maybe like buy something for
Yeah.
your business or
Yeah.
like put
Yeah.
it back into the
Yeah. It all
business.
just
So,
depends. But that way you're really kind of covering your bases and knowing you're kind of putting enough aside.
yeah, that makes sense. In terms of like paying yourself as a business owner,
Yes.
so if you're putting 30 or 35% aside for taxes, then do you take like 10% or something to pay yourself, or
So,
how would you do
so
that?
this is the piece that I think is a very personal kind of allocation. So I don't know, there's tons of people out there who've probably read or follow the profits first model. Um, the premise behind that is that you're putting money aside into different buckets to cover expenses and all these different things. And their model is
Mhm.
fantastic. I think it can get a little bit confusing and a little convoluted. But
Yeah.
the idea of taking your business profits and splitting them among buckets, I think is a really, really good tool for business owners. So we kind of follow what I call like just a modified version of profits first. So we look at your profits and kind of, allocate that out into three areas. So one, it's
Okay.
going to be those taxes, right? So say you're putting 30% aside for taxes. You have
Mhm.
70% of your business profit left for that month. This is where it gets a little personal. Do you want to put 10% of that 70 into a business savings and pay yourself 60? Or do you only really need to pay yourself 20% and you can put the rest in business savings? Or do you need all of that to cover your families? It's just that's kind of where that personal piece comes into play. But
Yeah.
as long as you're kind of cutting off 30 to 35% right off the top from your profit, that remaining amount is really what is appropriate for you to transfer out as a draw to yourself.
Yeah, that makes sense. It's interesting because when I started to put like the 30% aside for
Yeah.
taxes, and then I looked at like what I was spending in my personal, I was like, I do not need to be getting nails done, all
Yeah.
these things, because then I could just use it for like things that really
Yeah.
make me happy.
Yes.
So it does help mentally too.
Yes. Yeah. Yeah.
Um, I would love to talk too about like quarterly versus monthly, or not monthly, quarterly versus like yearly taxes, and what you would recommend, like if that's something that you should do right when you start your business is quarterly, or how you would kind
So
of approach
all of
that.
this is so quarterly taxes are probably besides 1099s, the second thing I get the most questions about.
Hmm.
Um, I think it really helps to understand the concept of what quarterly taxes are. So you might hear them referred to as quarterly taxes, estimated taxes.
Yeah.
What they are is that the IRS says all taxpayers, whether you're employed or you're self-employed, excuse me, you have to put away, I'm sorry, you have
Oh,
to
no worries.
pay 100% of what's shown on your tax return is your taxes due
Hmm.
for the upcoming year. So for example, on your 2023 return, if it showed you all your income, all your deductions, your total taxes were $15,000. And that's before any payments you've made or anything.
Yeah.
The IRS says, okay, now for 2024, you have to pay $15,000 in to us throughout the year in even quarterly payments. Now, if you are a W-2 employee, your employer's handling this because you're taking all those taxes are coming out of your paycheck. They're sending them to the IRS. You don't even have to worry about it. They're covering all of that. They're sending, but if you're self-employed, you don't have a paycheck. And so the IRS isn't getting that money. Not an easy concept. The idea is it's a prepayment of your upcoming taxes. And whether or not you need to be doing that depends on your prior year tax return and your tax structure. So I would really reach out to a CPA when you start your business to kind of figure out like, if I need to pay in quarterly taxes based on last year, if you do, what are they? If you don't pay in the amount you're supposed to, you can't be penalized with interest and penalties. They're usually pretty minimal. So there is some school of thought with people saying, okay, well, maybe I need that capital to invest in my business throughout the year. I'm not going to pay it into the IRS, and I'm going to kind of view those interest and penalties as sort of interest, if you will, because that's what they are. So there is some school of thought of people saying, I don't want to pay quarterly taxes. I'd rather just pay $1,500 at the end of the year as like a penalty, but I had that cash available to me throughout the year. I always recommend pay the bare minimum into the IRS to avoid those penalties, stock the rest up in a tax savings account, cut your big check at the end of the year, and kind of go from there. Like, don't pay the IRS more than you need to, but I do recommend paying those. So it's a confusing topic, but I would say reaching out to a CPA to the point where you are going full time in your business is a good. Typically, year one, you don't have to pay in anything quarterly. You have to view quarterly taxes as a prepayment of your upcoming bill. If you start to view it like that, then I think it kind of simplifies it a little bit more because you either pay it now and avoid, throughout the year as a prepayment, avoid the penalties, or you wait until the end of the year. But regardless, you're going to have to pay it in. It's just a matter of when you have to pay it in.
Okay. That makes sense. Yeah.
Yeah.
And then I did have a question on I ran into this but last year when I filed my taxes, that was the first time I really had to collect all the write-offs and everything. And then when it came time to actually paying what I owed, I had the option to pay with a credit card or a check. So I was curious what your thoughts are on getting some points with your credit card and paying it or just paying outright.
Yeah. So there's, if you use TurboTax or some of these, they're going to give you that option. If you go onto the IRS's website to make your payments, you typically can do a check transfer. You can do a credit card. Most of the credit cards have fees associated with how much they're going to be. I think this is a very personal topic. If you're the kind of person who's I have that money earmarked, I'm going to put this $14,000 on my credit card. I'm going to get a whole bunch of cashback points or redeem, whatever. And then when that credit card's due, I have the cash. I'm going to pay it off and I'm going to move on. If you're that person and you feel like you can handle that, then I think if that's a benefit you want to take, do it. If you're the kind of person who's ooh, I want to use this money now for something else, I'll deal with that later, it can create a lot of problems down the road because now you're racking up a credit card bill. You're losing the cash to pay that. Also, you're going to start paying interest on that credit card bill. So I think it's a personal preference. If you're the kind of person who can just, you have the money, you want to pay it off, go for it. But if you are going to kind of view that more as a loan, you're probably better off looking at an installment loan or something like that with the IRS.
That makes sense. Yeah. That would get a little tricky because I could see how it would get forgotten about. And then, that could end up pretty bad.
Yeah. It can rack up pretty quickly.
Definitely. Yeah. When it comes to saving the receipts, a lot of my transactions for my business are online. So I get an online receipt, I guess. Yeah. And what I've been doing is I have a folder on my email, tax write-offs 2024, and I just drag it into there. Is that the right way to do it?
That's exactly what I do, honestly, because at this point, I would say 95% of my business expenses come through my email, whether I'm paying a contractor or it's my, monthly Zoom invoice or whatever it is. And I save them into that folder. When I'm doing my monthly bookkeeping though, I do look at my expenses and I go back into that folder. I'm yes, I have Zoom. Yes, I have Canva. Okay. I need to go into Dubsado and pull my invoice for the month because I must have deleted it or something like that. So I do make sure I have them all saved in there. And I think that's perfect. Yeah. I have some clients that take it a step further and then they download all of them and save them into Google Drive, which is also perfect. Dropbox, anything like that. There's also options within certain accounting platforms where you can forward those receipts to yourself and it will attach them to your expenses, which is also great. At the end of the day, whatever kind of system works for you, you just want to have those receipts, because if
Yeah.
you were ever to get audited the way it would look, typically a random audit, the IRS isn't going to say, show me every expense for your business. They might say, okay, you reported $9,043 for software last year. I want to see $9,043 in invoices, not your credit card statement, but the actual invoices, because the invoice proves the business purpose. If I just see Amazon on your business account, I have no idea what that is. But if I look at your invoice and I see that it was for, a new monitor and a keyboard, I can associate that with your business. So they won't take credit card or bank statements. They want to see the invoice. So at the end of the day, if the IRS were to come to you, you're like, oh, here you go. I have it all saved right here. That's really the idea. So I think kind of knowing why you might need them helps to kind of devise what kind of a system would work for you best.
That makes sense.
But yeah, I do the exact same thing with my email, because every once in a while I have like a meal or some charge that I get an actual physical receipt, and I'll take a picture and I just email it to myself, and then it hits my inbox and I save it. So I think it's a really easy system to kind of maintain.
Okay. That's super helpful, because it's actually kind of like mentally nice to have it just in one place too, like instead of all these papers everywhere.
Yeah, for sure.
In terms of write-offs, because I feel like there's a fine line sometimes with certain things that maybe people think is a deduction, but like kind of isn't. I actually ran into this last year because I went to get like a massage, like a deep tissue massage. And then the lady was like, you can use this receipt as like a write-off because like you sit at your desk. But I was like, is that a write-off? So I'm curious with you, like if there's like some, I guess, write-offs that aren't technically considered part of the business, like what would you recommend someone does to know like what actually can be deducted?
I mean, there's tons of research you could do online. You just have to, know if you're looking at a credible source, because like I mentioned, TikTok has made all these tax write-offs and loopholes go absolutely viral. That doesn't mean that every single person is correct in what they're saying. Really good, credible IRS has really good guidance on things. There's also a lot, like, I mean, if you're looking at Intuit or some of those platforms, those are going to be a little bit more credible sources. The other thing is just reaching out to a CPA and scheduling calls with them to kind of figure out. The idea with write-offs is, when we were in public accounting, they kind of called it like, roulette with the tax. Like, you may file your taxes your whole life and write off a bunch of crazy stuff, and the IRS never really flags you and they never really know, and you move on with it. But there's always a chance, know, and my stance on this as a CPA is I want all my clients to be set in a perfect position that if they were to get audited, nothing's going to change. Because that, to me, the end goal is to alleviate all the anxiety and stressors related to your taxes. So you can write off whatever you want to write off. It's a matter of whether or not you get dinged and, you could get audited. And if you start really heavily like writing off home office expenses or mileage, like there's certain things that the IRS system will flag. So ultimately, this is not like a end all be all, catch all for everything. But think about if you were an employee for your company. Would you reimburse your employee for that expense? And that's kind of a good internal system of yes or no. Like, if you were an employee of your business and your employee turns around and they're like, hey, here's my Chick-fil-A receipt from Tuesday while I was working, would you reimburse them for that? No, like you don't.
That's a good way to think about it.
Right.
Yeah.
And if they came to you with a massage, they're like, hey, I got this massage because I work all day at my desk. Would you reimburse them for that? No.
Yeah.
So it's not perfect by any means. And there's always like kind of gray areas and nuances in tax code and all of that. But it's just a good kind of mental check to think about it if you're trying to really kind of be conservative.
Yeah.
Same thing. Like if someone came to you and they said, hey, I just got all these clothes and I'm going to start wearing them to work. And you're like, no, you could also wear those outside of work. I'm not telling you what to wear.
Yeah.
But if you're telling them they need to wear a branded polo, then you would reimburse them for that polo. So I think just
Okay.
kind of thinking of it like that is helpful. Like I said, it's not the best, it's not a catch-all for everything, but it's a good kind
That
of
helps.
basis. Yeah.
Yeah. That's a great mindset to have.
Yeah.
I guess to kind of like round everything off.
Yeah.
And I know that we're like approaching into like tax season.
Yeah.
What would you recommend that like new small business owners do right now to kind of like prepare? So, I mean, they probably should have been preparing all
Right.
year, but I guess to kind of round everything off, what would you recommend?
So I think it's twofold. I think at this time of the year, I see a lot of times people scramble and they just focus on getting last year cleaned up for taxes and they ignore this year. By the time their taxes are done, we're already into May and we're 5 months in, and this year's a mess too. So I think there's two things that you need to do. You need to get things together, like start finding all of your, pulling all your income together, organize your stuff. If you use Honeybook or Stripe or something, pull in all those income payouts into a spreadsheet and start pulling all of your expenses together. If you have stuff in a business account, it's pretty easy. Like okay, every month I've got my Adobe charge. Start some way compiling and summarizing that. While you're doing that, start implementing that now for 2024. So view 2023 as like a one-time project and then start implementing that on a monthly basis for 2024. Set aside a CFO day once a month. We all hear CEO days. I'm going to focus on my business, but a CFO is just as important as a CEO. So set aside half a day or something for you to go in, work through all your January. It's January right now. It's so easy to bite off. So get in there and start pulling your stuff together, whether you're using QuickBooks or Xero or a spreadsheet, but some way to start tracking your income and your expenses for the month of January, save for taxes, and kind of get into that rhythm. And then kind of view your 2023 as more of a project. Because that's one of the things I see all the time is people try to catch up and then it's like a hamster wheel and you're never getting off it because you're constantly catching up.
That's such a good point. Yeah.
Yeah.
And I highly recommend going to Jackie's content and like your newsletter. Like I said, it's so helpful. Just like always reminds me like I need to be doing my CFO day.
We also have an income and expense tracker, like a freebie download. And if you're not utilizing, you don't have a system and you're just kind of willy-nilly, that's a really good place to start because it's going to give you some sort of a system to start inputting your expenses and your income and, having somewhere to track things. I recommend really getting started in QuickBooks or a software. But if you're not there yet, you're not ready, you need some system just to start. That's a really good place to start. That freebie is a pretty good freebie.
I downloaded that and it's helpful.
Yeah.
I was like, I just need all the finance help. This is not my area of expertise. So this was super helpful. I really appreciate you like taking the time to like explain everything and super helpful. So if people wanted to like, I guess, chat with you or learn more, where can they connect with you? And next steps?
I would say first is always going to our website. That's going to give you the most info about me, about our, our services, our team, kind of really give you a good sense of our vibe and how we operate.
It's a beautiful website, by the way.
I love it. I love it.
Your branding, everything. I love it.
And that's going to be the best place to kind of catch all. We've got all our freebies there. So I would say deep dive into the website. And then after that, really get onto Instagram and start browsing content. And again, get a vibe for if you feel like we would be a good fit. And if at that point you do, booking a discovery call with me, if you're thinking about monthly services or things like that, that's a great option. I tell people right now, I love DMs. My inbox is flooded with people I don't even know asking questions about tax, whatever. So if you really have something, like if you just love a post or, quick stuff, Instagram is fantastic. But if you really want to like hit my inbox, send me an email and you can do that through the website. Just because it's that time of year where like it's wild to see what questions people have. So if you really are interested, I'd say book a discovery call. If you've got just some general questions, go ahead and, send me an email through the website and we can kind of talk through that stuff. But if you feel like it'd be a good vibe, I think that would be the best place to kind of start.
Yeah, that's perfect. Thank you so much again. Awesome. I really appreciate it.
This was fun. I will talk tax and numbers anytime. So I'm always excited when people want to chat about the nerdy side of your business, but it is. It's so important to not ignore. And it's such an anxiety driver with small business owners. And the sooner you can just address it and not ignore it, I think it helps in so many ways.
Yeah, and you make it like easier to like mentally digest because it's not
good.
like I'm not that side of my brain doesn't work.
Yeah.
So it really
Yeah.
helps. I appreciate it.
Good. I love
Yeah.
that.
Thank you.
Awesome. Well, thank you for having me.
All right, you guys, thank you so much for listening to this episode. If you enjoyed it, I would appreciate it so much if you subscribe to my YouTube channel or go follow and download on Spotify. I have all my episodes on there if you want to go listen to them. If you're on like a car ride or wherever you're at, definitely go check those out. I really hope that this episode was helpful to you. I know that I learned so much. She gave me so many helpful tips, and I really hope that that helped you as well. But if you want any sort of notes or anything that we went over, I will have some notes in the show notes as well as the description box on YouTube. But I really hope that you guys enjoyed this episode, and I will see you in my next one.